Hello traders, Gary Wagner here. Just after 11 o'clock in Honolulu, 5 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands, July 14th, 2017. And this is the Daily Report for gold and silver, our weekend review. And what a week we have seen. A 1-2 punch with Janet Yellen giving testimony to both Congress as well as the Senate on Wednesday and Thursday, and the Labor's Department release of the most current CPI figures for June. Those two in combination sent repercussions and rumbles throughout multiple financial markets. First, we'll look at gold and silver, both closing dramatically higher. $1,228 fixed closing price of gold futures, putting it up almost $11, $10.70. Silver gaining 25 cents on the day, about 1.5 cents gain, closing just shy of $16 at $15.94. The dollar sinking like a rock, 94.90, puts it off about 0.6%. And most importantly, the Dow Jones Industrial Average, as well as the Standard & Poor's 500, closing at new all-time record highs, and the NASDAQ competing with them, closing at the all-time record high. Dow gaining about 85 points, NASDAQ gaining about 39 and 11 points for the S&P. What an interesting end to a week that was filled with multiple events, and we saw gold and silver pricing acting not so much lackluster, but I believe almost lethargic to news that was out there. That isn't the case today. Today we witnessed an extremely strong surge in precious metals. Gold just settling right now, up almost $11 at $1228.20. This, of course, is most active August contract. Obviously, the candlestick pattern that we are looking at is an engulfing bullish. Now, the size of this candle is the type of candle I had been wanting to see throughout the week to give us technical confirmation that, in fact, we were looking at a bottom and a conclusion to this long, drawn-out correction, which began, the first week of June, after gold failed to break above $1,300 per ounce. As this market came down earlier this week and late last week, we touched these intraday lows that came in roughly at 1204. However, the moves that followed, although gold began to trade higher, take a look at the candle size in terms of the body. And the body, of course, is a relationship between the open and the close, how small they were. Of course, yesterday we had a small down day, and the net change from where the lows came in at the beginning of the week, you can call it 1205, to where the market had closed, although it was about $11, it took 4 days to achieve. And so, as far as I was concerned, I didn't have any real confidence that this market might not, in fact, slip back. Well, traders, that changed today as this market traded and effectively closed near the highs. The high itself is quite interesting because if we draw out our 200-day moving average, and that's the first real average we'll want to see it break above next week, of course, you can see that the high quite eloquently came to the top, and at least for the short term, that is where we are pegging resistance. However, on the bullish side of the fence, we are looking at a basic fib retracement, and the lowest level of that retracement comes in at 78%, and that is 1224, and we have effectively not only taken out that number and challenged it, but closed well above it, as the market is currently trading about $4 above that at 1228. And traders, at the same time that we saw gold really performing quite well, we had a very, very similar scenario occur in silver. We're looking at a daily candlestick chart of silver. We also can identify an engulfing bullish pattern, which was created over the last couple of days. More importantly, when we look at this chart, we'll go ahead and blow that up a little bit. The one thing that characterized trading at the beginning of this week in both gold and silver were these extreme lows that sellers were able to actualize as they push the market lower. But I believe even more importantly, the buying that came in following those sells, taking the price point back up near or above the close, both here as well as the following day. Now, the next thing that we'll notice is that just as in gold, we witnessed pricing closing above a 78% retracement in silver, and silver now is just about 5 cents below, breaking above $16. And when we look at this 1 fib retracement, we can see it's a very, very long-term retracement, which in essence goes to these highs at about 1866 and these lows just above $15 per barrel. We will certainly initiate long positions in both gold and silver right at the beginning of the week. Of course, I will send out a special trade alert to that effect that will go out via email as well as SMS text message. Participants, if you haven't signed up for the SMS service, there's no cost for it, but you need to add your phone number to that. That way we can get that trade alert to you in multiple manners. And traders, as we said during our opening statement today, the repercussions of the events this week really sent rumblings through multiple markets, U.S. equities, dollar, and precious metals. We're looking at the dollar index currently. Dollar index was down almost 0.7%, breaking below 95, closing at 94.88. A tremendously strong downside move if we look at the relationship or the body size here. We've seen the size before, but it usually indicates a further drop when you have this kind of severity. And in terms of how that affected gold and silver pricing, obviously it was a big component. We're looking at the Kitco Gold Index. This, of course, is spot or physical gold, which changed or closed up today $11.60. Of that $11.60, a weak U.S. dollar accounted for $8.40 of that price change. Normal trading also bid it up, so you have the 1-2 combination of a weak dollar and the bidding or buying of gold today. And that affected our net change, which came in at $11.60. The same can be said for silver, an 11-cent increase. But take a look at the buying in silver, an 18-cent increase, well above that of the weak dollar, which is one of the primary reasons that we are going to be executing trades not only in gold, but also in silver at the beginning of next week. And traders, it wasn't just about gold and silver and the dollar. U.S. equities surging today. The Dow Jones Industrial Average closing at a new all-time record high. Of course, we're looking at a weekly candlestick chart. Our effective close is head and shoulders above any price point ever achieved in the Dow Jones Industrial Average. Truly a momentous and historical move. That's not all, though. When we look at the Standard & Poor's, let's go ahead and pull up our weekly chart. The same can be said in terms of where this market closed at. That would be right here. And again, effectively, head and shoulders above any other high price close in history. Now, the NASDAQ, which performed quite eloquently, is the only one of these three indexes which did not close head and shoulders above previous closes. However, and let's draw this as straight as possible, it certainly matched previous all-time record highs. And given that the NASDAQ has been the strongest of those three indexes in terms of percentage gains, the fact that everything closed at record highs is a quite interesting feat, and it is a trend I believe will carry on through next week. Traders, absolutely no doubt. We had gold and silver prices tracking higher for the beginning and the better part of the entire week. However, the characterization of those moves at the beginning of the week were small, concerted steps, very, very, very modest gains on each and every day. That was up until yesterday when we saw small declines. That all changed, though, when the Labor Department released the latest figures, And the anticipation is now that the Federal Reserve is really going to have to slow down its pace for normalization or interest rate hikes. There is now a much lower probability that there will even be another rate hike this year, and the Fed will probably look at asset balancing, in other words, asset liquidation. Because of that, I expect the trends that really began at the beginning of this week and really sped up on today's trading activity to really spill through next week. I expect higher gold prices, I expect higher silver prices, I expect more pressure on the dollar, and I expect U.S. equities continuing to track these all-time record highs, moving to yet new multiple record highs. Because of that, I will be recommending the initiation of long gold and long silver at the beginning of the week. I will send that out as a special trade alert, both by email as well as SMS text message. So be ready for that. That will come out Sunday here in Hawaii, Monday overseas, and Sunday in the mainland, if it warrants, if not by Monday. This has been Gary Wagner wishing you, as always, good trading. We will talk to you next week for another daily update and review. Bye-bye.